Brian Shannon here from Alphatrends.net. It's Friday, the 16th of March, 2018, and we had a little bit of selling here today to bring these markets basically lower for the week. The S&P 500 not as bad as it looked because it paid a dividend of $1.10 today, so keep that in mind. But we did have a little bit of selling, particularly right at the closing bell here. If we take a look at the 5-minute chart, you can see it sold off a little bit, but again, very mild selling. And if we take a look at this 30-minute time frame, you can see where we are overall. The volume weighted average price from the March low here, we're still hanging above that, and that was the level that we were kind of looking for this market to possibly come down to, because it's also approximately the year-to-date volume weighted average price near that 273-ish level. The volume weighted average price off of the yearly peak is down at about 272. So we have this pattern in here that's been a little bit sloppy. Let's take a look at that daily time frame. On the daily time frame, you can see we had a big gap up last Friday, and then it's kind of been selling off since then. It's right below the 50-day moving average at this point. So, realistically, the S&P 500 looks like a big mess. That's why we need to focus on the intermediate term time frames. And right now, for the week, our average price was right there at the 5-day moving average. And I think that next week we have to continue to be a little bit defensive here until we can get back up above that 277 level. And I wouldn't want to buy it on a straight move right up through there. I would prefer to see something like this occur and then to purchase strength in the S&P 500. As for the Nasdaq obviously remains in a strong uptrend. It is above the year-to-date VWAP. It's above the volume weighted average price from this low and from the low earlier this month, and these peaks as well. The only volume weighted average price of significance that we're not above is just from this recent high here. So if we take a look at the 30-minute time frame, there it is from the recent high as well as this gap higher. That comes together right at the 5-day moving average. So for the buyers to regain control of the momentum, it's going to need to get back above about 172.50, 172.75, and maybe it would be best to see a little shakeout first and then something that looked like this before it was to be able to continue to move higher. When we look at the daily time frame, we do have, of course, the break of this resistance, and whenever we see that happen, especially after it's been extended, we have to be aware of the possibility that maybe if this market fails from here, it could fail pretty quickly, because from failed moves often come fast moves in the opposite direction. Now, there's nothing here indicating that will happen. Right now, we're just in a little bit of a defensive posture because it is below that declining 5-day moving average and below these two volume weighted average price levels. But otherwise, the longer term trend still very much intact in the Nasdaq. The Russell 2000 looks kind of similar in that the volume weighted average price off the recent peak comes together with the volume weighted average price from this gap, and that's where we see the 5-day moving average. So this is here a 30-minute time frame. Each one of these candles represents 30 minutes, and for this Russell 2000 on this 30-minute time frame, for us to want to be able to trust, let me do that. That way you can see that the 30-minute time frame right here. I just adjusted the chart a little bit in the frame. Anyways, if we take a look, let's back it up to the daily time frame for a moment, because we have what looks like a nice looking pattern here still. I'm sure there are people calling this a double top, and as I mentioned last week, this isn't what a double top is. We only know after the low point of the double top is formed that it was one, and that's too far away to really be considered with any seriousness. The year-to-date volume weighted average price we remain above. We're also above a rising 10, 20, and 50-day moving average. The prior resistance we're still holding above, and if we take a look at the volume weighted average price off of this peak right here, we're well above that, as well as above these recent lows. So back again to that 30-minute time frame, it looks to me like we're just a little bit cautious right now, and perhaps something that looked something similar to this, and not necessarily have to have a sell-off down towards there. The point is to stay underneath this level. Once it breaks above that, if it's not extended, then it might be a good continuation higher with a stop just below the most recent relevant higher low. The semiconductors continue as they have for the last couple of years now to be the strongest market. This group is well above that prior breakout level near the 108-ish, 107.5 level, and you can see that we had a gap higher earlier in the week, and it's just kind of been absorbing those gains. The market is a little bit extended here from this move that we saw for basically 10 points from 104 to 114, but it appears so far to be correcting through time, and a time correction is more bullish because it shows there's still bidders in this market. And same story, the volume weighted average price off the March low we're above, so that's going to be an important level to hold next week. If we break below there and stay below there, then perhaps it accounts for a bigger pullback. But at the same time, we're kind of in this little range here that is showing, for now at least, higher lows. And if we're to break back above here, then you've got to give the benefit of the doubt to the buyers still, as the primary trend remains higher. Biotech's, looking at the daily chart first here, we can see a nice pullback in this group. We had broken some resistance about a week and a half ago, and it's closing right at the 10-day moving average, which is above the 20, which is above the 50-day moving average. And you can see here on the now down to the 65-minute time frame, there's that prior resistance, and the year-to-date VWAP is at about 111. On a 30-minute time frame, here, let's go to that. You can see again the volume weighted average price off the recent peak has been holding as a little bit of resistance, and we maintain above the volume weighted average price for this month, and that was obviously that the low right here, this higher low on the daily time frame. So for the biotechs, I like the way this group is shaping up. I don't want to buy it while it's below a declining 5-day moving average. I'd rather see something like this occur where it kind of gets up to this prior little area of resistance, maybe even through it slightly, pulls back, holds above the 5-day moving average, and then begins to move higher. That to me would be the bullish scenario. Let's take a look at Bitcoin, or actually let's look at gold. Gold still unable to break above the 1380 level on the weekly time frame. Nothing's changed here. We still have these higher lows, and we have this band of resistance overhead. So again, nothing's changed there. Bitcoin, however, did fail to hold the 200-day moving average this week, and where it's down to now is right at this volume weight, the 61.8% retracement of the low from February to the peak, where we saw it encounter sellers at the volume weighted average price from the peak. So this rally has pulled back now 61.8%. That's this level in here, and it's trying to find a little bit of stability right now, but still it's in a downtrend. And we were looking for a place to add to a small long position that we have for a very speculative piece at Alphatrends. But the primary trend is still lower here, or we can't trust rallies with a declining 50-day moving average. So when that 50-day moving average is declining, you have to realize it's still in a downtrend, and any bounce, any purchase that you're looking for shouldn't be expected to maintain that strength. Instead, you're looking for bounce trades. And while we initially bought some over in here, we didn't get a sharp rally, so we're not fully committed on our portion of the pullback, and it is taking a little bit of heat, but nice to see that it's coming back a little bit today. Overall, very small position for us at Alphatrends. But back to the equities, I think next week is going to be one that kind of makes or breaks this little area in here. So maybe a little bit of sideways consolidation after this little pullback, and then reemergence of the uptrend, or maybe something else. Let's listen to the message of the market and be prepared for any scenario. Hope you have a good weekend, and I'll talk to you next week. Thanks.